This is the Friday, February 23rd, 2018 version of the Market Plus segment. Joining us now is Dan Hueber. Dan, welcome back.
Thanks very much. Pleasure to be here.
Dan, let's start in corn. I mean, we didn't get a full discussion when we came to the corn markets here.
Correct.
And we have a couple Twitter questions that I want to make sure we get in. So let's start with Chad in Rendalia, Iowa, at Hort4Sci on Instagram says, is it foolish to be aggressive cash sellers of corn? Resistance in old crops seems to be especially strong.
No, I mean, selling into rallies is probably never a bad idea. You know, one of the things I think you always have to keep in consideration with the corn market, there's still a reasonable amount of carry in the corn market, so you probably want to take advantage of the carry that's out there. But you know, this rally's been great. It's taken us up to levels of pretty decent resistance. You know, to really carry it beyond, well, I mean, take it one step further. In the last 30, 45 days, we have seen funds move from a short position now to a long position. So you've already spent a lot of buying power turning that around. So yeah, I tend to think it's going to be difficult to really move up and beyond this point, at least until we get down to some weather issues in the summertime. So no, I don't think there's anything wrong with rewarding this rally.
Okay. When you look at the March chart, do you see a lot of resistance, or we've seen a lot of resistance from 368, 370. Do you anticipate us to break through that?
Possibly, you know, but I think if it's going to happen, it's probably going to happen within the next day or so. So and even if we got through 370, I think your next level of resistance is 376. I mean, it's not like we're going to 390 corn at that point in time. So no, I think at this week, all week long, 368 was just like a brick wall. So we had suggested either taking advantage of it with sales or maybe buying some short-dated puts to get ready for a correction, possibly down into early April.
Early April is when you anticipate a correction to happen?
Into early April, so throughout the month of March.
Okay.
Right.
Another question here from social media. Scott in Cedar Falls, Iowa, at Berg Farm 23 wants to know, with as much farmer selling of old crop corn on this rally and the funds getting even, can we get even another 20 cents on old crop if the funds go long 100,000 contracts?
Well, you know, there's a lot of reasons why funds come into the marketplace, but it's, you know, some of it's momentum. Once they get moving and indicators turn, they're going to add a certain amount of money in there. You know, that said, I don't see a huge reason for them to commit a lot more money at this point in time. So it's not like you have something out there that's really an imminent risk to the corn market. Yes, the demand has certainly shaped up over the last 30 days, which is great to see. But even then, it's not really changing that overall supply-demand picture. I mean, the carryout's not going to be changed probably more than 50 million bushels one way or the other. So I really think, you know, to be talking about another 20 cents higher, we need to start throwing a weather risk element in there. It's kind of hard to do that at the 1st of March.
It is.
Right.
Even as we haven't started planting yet.
Correct.
And one more Twitter question here. Kendall in Iowa wants to know, are you aggressively selling new and old crop corn, which we kind of discussed, and soybeans at current prices? Is there further upside limited until June?
And I would say, and I don't want to say aggressively selling new crop, but I do think prudence would say certainly you reward a rally like this. As we spoke of earlier, these markets in general have stopped close within this range, or well within this range for the last 3 to 4 years. So yes, I mean, it would say take advantage of it just as far as a risk management standpoint. You know, that said, I tend to be a little more positive longer term. I think we're seeing a lot of other shifts happen on a worldwide basis as far as ending stocks are starting to be reduced. The dollar changed in the last year, even though the dollar may bounce back. I still think it's going to be in a defensive pattern for a while. Plus, I do tend to think that, you know, sometime here after the first quarter, we're going to see the equity markets turn lower. And when that happens, that could be the stimulus to bring extra money in from the speculative side into the commodity market. So yes, longer term, I'm not a terrible, I don't want to say I'm overly bullish just yet, but I think we've got some higher highs yet to come. So I'm not, I don't want to get overly aggressive just yet on the new crop. So.
All right. We had a lot of reports come out this week. We had USDA's Ag Forum Outlook.
Certainly.
Any surprises there to you in when we look at soybeans specifically?
Not really, other than, the numbers we had, speaking with farmers, speaking with a lot of bankers, we were thinking there could have been possibly just a smidge higher soybean number. I think they
acreage number?
Acreage number on the soybeans. The yield number on this is really nothing but a statistical trend line yield. So, I mean, there's no shocks really there. They kind of gave us those numbers back in December. But, the bean number I still think could be a little bit higher. We tend to, a lot of people, when they're under a little financial stress, and I think there's more than our fair share of that out there at this point in time, will tend to plant a crop that takes less input in the spring, and that kind of favors the beans. They did boost the wheat acreage about 500,000 acres, which may cut back from the beans a little bit. The biggest increase of all the acreage came in, well, other than feed grains, other feed grains was in cotton.
Right. So,
and that may be tempering the expectations for the bean acreage as well. But regardless, no major surprises. We kind of think that the bean acreage number could maybe be a touch higher than it is in corn, just a little bit lower. We've been talking for 2 years now that we're going to finally have more beans in the ground than corn. Hasn't happened yet, so we'll see if this is the year that does occur.
Okay. One other Twitter question for you. Bill in Amenia, North Dakota at Crystal Co. Bill wants to know how much more upside potential for beans.
The short term in here, again, we've been saying all week long, anything in the 1060 to 1080 range on nearby beans is probably going to cap this market. So you realistically, I didn't catch the close today, but we're probably within 20 or 30 cents of that. So yeah, I guess I'm not expecting, and even if we do move higher, I would tend to think it's going to be quick. I mean, we'll be up and back away. So
make a correction.
If you want to make some sales, don't wait until thinking it's going to hit. Then I'm going to do it. Have your orders out there and ready to go. So
let's talk cotton, because we didn't get to talk about that during the regular program. There's still a big focus on South American weather in the cotton market as well.
Certainly that has impacted in the South as well. And of course, cotton has been one of those trades too that, the export demand in cotton has really surprised a lot of people. If you went back even 5 days ago, the cotton market just looked pretty lifeless. We'd corrected down away from the 80-cent level, and now has just come back with a vengeance. So I think, the realization that, yes, the world's capacity, the world's supply on cotton is starting to be reduced. Demand remains, of course, very solid for the product. So that's what brought us up. Now we haven't gone to new highs, and when you get into the 80 to 83 cent range on cotton, it is a tough level of resistance, as we've seen in so many other commodities. We've reached these old lids, and we don't seem to have the incentive to move through there yet. And I think here again, when we look out into the summer months, that will be the ultimate determinant factor if we can actually move into higher highs here yet later in 2018.
Is there a big concern when you look at cotton quality-wise?
I guess anytime you have a crop under stress, so there's going to be quality issues or potential quality issues. So certainly, and even in this country last year, we had a lot of quality issues getting the last of the crop out with various hurricanes and rains coming through. So, that could come back and impact us later when stuff starts moving out of the warehouses. So,
Dan Hueber, thank you again for joining me.
My pleasure. Thank you.
That wraps up the Market Plus segment. Join us again next week when we'll examine how one community was able to harvest dividends after a devastating tornado, and Elaine Cubb will sit across from me at Market to Market table. So until then, thanks for watching, listening, or reading. I'm Delaney Howell. Have a great week.